Good morning all, CamelbackTrading.org coming to you this Wednesday morning, October 6th. We are looking at Window Trader's market profile of SPY, IWM, and Triple Qs. So what's going on with this market? Well, on Friday, market is good, right? Market rips up on Friday. Monday down, yesterday up, and this morning down. So no follow through by the bulls, no follow through by the bears. Quite simply, it's just on the shorter time frame, the daily, that the market is looking for more market-generated information. It's a market imbalance. We will have balance rules and gap rules applying most likely this morning. Remember, in the bigger picture, the bears are still in control. Even though we came into balance yesterday on the daily, we have gaps above us. We have a possible gap today. We're down in the weekly. The monthly is balanced to down, and the daily is in balance right now. So quite simply, on the shorter time frame, the market is waiting for more MGI. Look where we battled. Very visual area. We're trading right at that 11-wide POC from the 4th. We said the other day, is it possible that that was long-term money coming in? Possible. We'll see. We'll see again this morning. At some point, the bottom line is this. We're in a 3-day balance. If we take out the bottom of that 3-day balance, which is Monday's low, we are going to go and test July's low. We've been talking about that. And again, I don't think that would be unhealthy. Maybe this price action has been a little erratic and unhealthy the way it's been going from day to day. But the bottom line is it's all inside of a 3-day balance right now. And as far as the upside, if they defend the bottom of the balance, well, then eventually the goal will be the top of the balance, which is Monday's high, and then you have all those firecracker highs. That's bottom line. Triple Qs right now, maybe a gap. Again, there's 75 minutes to go. A lot can happen, so we're not sure if they'll gap. Now, Russell, on the other hand, right now is about $1.70 below yesterday's low. So they might end up gapping lower. For us, we are about $1 lower than yesterday's low. For sure, it looks like the trend day, the lowest accepted price, all out the window. We were 9 wide. We shook out weak longs late in the day, and now whoever was still long is getting out, and the short game starts piling in again. As far as destinations, on the upside, right now, let me just see what they have as the overnight high, because I think that just changed as I was speaking. They have 433.49. Yeah, so it changed a little bit. So 433.49 will be our first destination right now on the upside. That's the overnight high. Then above that, right now we're going to use yesterday's low in case we gap lower. I'm sorry, so that's the first one. 429.39. That's yesterday's low. We'll use it on both sides. Then that fills the gap. Then the overnight high. Then we have 434.43, which was 9 wide. Yesterday's high, 435.49. For the downside, if we do not gap lower, we use yesterday's low of 429.39. Right now, I'm not giving you the single print or the lowest accepted price because it looks like they're being taken out. Below that, remember, we have that very visual 11-wide POC. So if we open above it, it's still a downside. If we open below it, it becomes an upside of 427.90. Then we have 426.36, which is the 4th low. 424.83 daily low, and then the real important 421.97 monthly low, poor low. So game plan for this morning. So everybody, again, there'll be gap rules, possibly gap rules, and balance rules in effect. Right now, pre-market, we've defended the balance low. Look at that, right? We came fairly close to it, within about 60 cents, and we've rallied just about $1.60 off it. Now, again, there's a lot of time. Are we going to gap low? Are we not? So the bottom line is this, whether it's now or at 9:30, the higher we go towards yesterday's low, if you want to take a short, you can do that. You're certainly going to be opening with lower value today. If you get acceptance, though, back into yesterday's range, I'd be out on that short because there's nothing there, right? Really nothing there. You'd still have lower value. Maybe you could take another short against B's low if it got back up or half back from yesterday. That would actually be the better risk reward, but although that's still about 70 cents lower than value low. But again, right now you can take a short against yesterday's low in it. I'm out. As far as a long, again, bottom of a 3-day balance. Can you take a long against it? Of course you can. See if it holds, see if they slightly stretch it. But if they get below it and start getting any kind of acceleration or acceptance, one-time framing down, single prints, you better get out of it, because below that low, like I said, there's nothing until that daily low, and then below that, nothing until July's monthly low. Again, these are all early plays. Volume, volatility, that's what we need. Well, we're getting both. We're getting ranges of $6 to $8. We've had volume of 90 to 128 million, 138 million. Right now, the volume early is 1.7, so the volume is going to be very good pre-market. And then on the chart, just going to show you the daily. So here we are. It was a 3-day balance. Monday's the bottom of it. Friday's the top of it. Right now, they've attempted to try to take it out from the bottom. There's one more daily low, which is at 424 and change. Where is that right there? No, that's the monthly low. I'm sorry. Here it is right here. 424.83 back on July 20th, then July's low of 421.97. Clearly will become a target. Below that, now we start talking about another monthly low, and the 200-day moving average would possibly come into the picture. But let's take baby steps first and see if we can even get to July's low. Come check us out at CamelbackTrading.org. Good luck trading today, and we'll recap at 4 p.m.